Americans are struggling to repay their federal student loans. The number in default has surged by millions in just the last year to take the total to more than 9.5 million.
We have got to get some relief off of our backs for these student loans. It's ridiculous.
I can't afford my student loans. Can't afford them.
The Department of Education thought sending me an email saying the SAVE plan was ending was gonna suddenly make me have $1,400 a month to give them for a student loan payment.
I am drowning in student debt. I have over $75,000 in student debt.
Amy Salada is a senior advisor at Protect Borrowers, a student debt advocacy group.
The number of defaults that was happening, it was like one person every 26 seconds, and now it's one person every 9 seconds.
So how did we get here? You've probably already heard that going to college in the US is expensive. And for many students, that means borrowing from the government to cover tuition and living costs. In fact, the average public university student borrows $32,000 to obtain a bachelor's degree. After leaving college, they have to pay back those loans, which sometimes takes decades. Let's just rewind a little. During the COVID-19 pandemic, the Trump administration paused federal student loan payments as an emergency relief measure. It was meant to last just a few months, but it turned into more than 3 years during which most borrowers didn't have to make payments.
We're still going through the ramifications of that when student loan payments were completely paused.
Judith Scott Clayton is an economist at Columbia University and an expert in student debt. When payments resumed, policymakers tried to make the transition easier.
Under the Biden administration, there was something called the on-ramp period, where for a year, if you didn't pay on your student loans, you didn't suffer some of the negative consequences of non-payment.
But those protections ended in September 2024. So imagine being a borrower who's made no student loan payments in years and now suddenly has to find hundreds of dollars every month. And there's another complication. Courts blocked a plan called SAVE that tied monthly payments to income. It was there to help struggling borrowers stay on track with their loans. That court decision has left many looking for alternatives.
It was the most affordable payment plan that has ever existed for student loan borrowers.
And experts say the alternatives could make repayment more challenging for borrowers across the income spectrum. The impact could be felt most acutely by those who can least afford it.
They would have been able, under previous plans, to not make any payment. Under the new plan, they have to make at least a $10 payment every month. And so my concern is that some folks could go into default, over $120.
And here's another twist. Many of the Americans falling behind on their student loans right now aren't even recent graduates. Data from the Federal Reserve Bank of New York shows that the people now defaulting on their student loans are on average 2.5 years older than those defaulting before the pandemic.
Folks, over 55 are one of the fastest growing demographics of student loan borrowers because in some cases, they've taken out loans for themselves that they haven't been able to pay back fully. And then in many cases, they've taken out loans on behalf of their children in their own names. And so, they might be hit with 2 bills a month.
Geographically, borrowers in southern states such as Louisiana, Mississippi, Alabama, Georgia, and South Carolina are disproportionately represented among new defaults.
We know that Black women hold the greatest amount of student debt because they have less generational wealth to kind of pay up front on their educations.
Being aware of the huge racial disparities in student loan repayment outcomes is something that I would be concerned about.
And there's another surprising detail. Most of the people now defaulting on their student loans were not behind on their repayments in 2019. So why are they struggling now?
This is happening in a context of a lot of other expenses going up for people. And so if you have to make the choice between, paying for medications in a month or paying for food for your family or paying your rent or paying on your student loans, I think most people are going to choose that other payment that they could make in order to kind of keep their family going.
For millions of borrowers, the choice might not be between paying and not paying, but between one bill and another. So what happens when they simply can't keep up?
They, start reporting that to credit bureaus, which then, affects your credit score and affects your ability to do all sorts of other things.
That means it's going to be harder to get a car loan. It's going to be harder to get a mortgage. It could even be harder, depending on where you live and what the rules and regulations are. It could affect housing applications for renting an apartment.
And it could get even worse.
The federal government has extraordinary collection powers. They can take your tax refund, as you mentioned, they can garnish your wages.
Quick explanation. Garnish means they can take money right from your paycheck. And the US government can garnish up to 15% of a defaulted borrower's disposable pay, though minimum wage protections apply.
That collection power has been turned off for 5 years since the pandemic. The Trump administration has delayed that, but I think advocates are expecting that any day that could happen again.
It's not clear when that will restart, but that's just sort of hanging over folks' head as another element of uncertainty here.
What would that look like in practice? Someone taking home $2,000 after tax could lose up to $300 a month from their paycheck. For borrowers already struggling to make ends meet, a significant financial hit. So when millions of Americans face the same problem at the same time, a lot of people have been wondering, is this a warning sign about the state of the wider economy?
I would take it as something that's independently of concern and something to watch. But I think the large increase is mostly an artifact of this strange period that we're coming out of, and not necessarily an independent signal that something is going terribly wrong with the economy. But, it's kind of going into an economy where there's a lot of other uncertainties going on.
For Amy Sulada, the most urgent question right now is what happens next.
The bare minimum would be not turning collections back on, which is one of the most devastating things that could happen right now.
So experts don't see this as a warning sign for the wider US economy, but for millions of borrowers, the consequences are very real. Damaged credit scores, the threat of collections, and hard choices between student loan repayments and other bills. Years after the pandemic paused, its effects are still rippling through the student loan system. And for many borrowers, the hardest part may be happening right now.